Good afternoon, everyone. My name is Christine Henderson from K & Burton in Brighton. I'm also a member of the REIV Sales Chapter Committee. Today, we're joined by Donna McMillan, Compliance Manager at Bayleys Real Estate New Zealand, and Angus Hook, ANZ Compliance Advisor at First AML, who are going to talk us through how to avoid being collateral damage in the global war on organised crime. Before I introduce today's speakers, I'd like to take the opportunity to thank our partner First AML for their continued support of the REIV. And just to cover some housekeeping notes for today's webinar, if you require technical support at any point throughout the event, please click on the support button in the bottom right-hand corner to contact the technical team for instant support. If you have a question for our speakers, please scroll down under the live stream and click on the Ask a Question button. You can also chat with your fellow attendees privately via the Chat or Connect Now button in the top menu bar. And if you miss any of today's content or you'd like to re-watch any of the webinar sessions you've registered for, all live streams are recorded and will be available on the platform 2 to 3 days after the sessions conclude. You can access these via the Watch on Demand button on the platform. It's now my pleasure to introduce today's speakers. Having started her career in property in 2004, Donna McMillan quickly made her mark. Her deep understanding of the property market, objective analytical approach, and strategic mindset fast-tracked her move to operations management and then compliance. When the AML CFT Act hit the New Zealand real estate industry in 2019, Donna was shoulder-tapped to take on the role for Bayleys Real Estate. And we also have Angus Hook. Angus is First AML's compliance advisor, specialising in Australian AML legislation and working with industry experts to create best practice compliance solutions. Angus has vast experience in the accounting industry, bankruptcy and restructuring law, and in IT, leading to his interest and involvement in First AML's anti-financial crime and legal compliance unit. He's passionate about competitive compliance and maintaining customer experience whilst keeping compliant, and works with clients to help them achieve this. He focuses on meeting clients' compliance programs and international research into AML and financial crime. Over to you, Donna and Angus.
Thank you so much for the introduction, Christine, and thanks to all of our guests here today for coming. So as Christine said, I am Angus and Compliance Advisor here at First AML, and glad to have Donna with us. So with that, we'll go to a little introduction. Real estate leaders like yourself are increasingly in the firing line of money launderers. In just February this year, the Australian Federal Police, the AFP, busted a $10 billion money laundering ring. At the centre of this bust were 9 criminals who amassed an eye-watering number of luxury and commercial properties, amongst many other items. Time after time, real estate agents are unwittingly used to launder proceeds from illicit crimes. Over the last 10 years, governments globally have clamped down on these activities through AML legislation, or anti-money laundering legislation, that extends to gateway industries, which include industries like real estate, as well as accounting and law. Until last week, Australia was an outlier, not actually applying this legislation to industries like yourselves. But the release of a governmental consultation paper last week on whether to regulate industries like real estate, which we'll call Tranche 2 industries, including real estate, indicates that this may happen. Today, we want to discuss, first of all, how real estate agents are used unknowingly to clean money gained from crimes like trafficking, human trafficking, drug cartels, like, for example, in that $10 billion bust. We'll also discuss the red flags that we often look out for in, I guess, other jurisdictions that are legislated, like New Zealand, and Donna will talk a lot about that in terms of what we can see for, working with criminals unknowingly. And also we'll go through some case studies and some stories in terms of not only, I guess, how industries can be targeted by crime, but also in terms of experiences like Donna's with Bayleys over in New Zealand and how they were able to prepare for, I guess, starting to do anti-money laundering checks, and also how they've adapted over time and, I guess, gotten used to this new workflow. And so, yeah, along the way, if you do have any questions, feel free to use that Q&A function, and we'll get to that at the end, and we'll be really keen to answer any questions you have along the way. So with that, Welcome, Donna. I guess Donna is an expert in the field of compliance in New Zealand for a real estate company called Bayleys that we don't have here in Australia, but are a major player in the New Zealand market. So Donna, for a bit of extra context for the audience, can you tell us a little bit more about, I guess, your role with Bayleys in terms of especially implementing anti-money laundering measures?
Yeah, sure. First of all, thank you very much for having me along today. I'm really hoping that I can give you a bit of an insight of the journey that we have been on in the last 5 years. It's certainly been one. And I thought what would be really helpful is just to give you a bit of an overview around the size of our organisation and just to give you a feel and I guess compare your business to what ours is and in terms of what potentially could be appropriate. So we are New Zealand's largest full service real estate company. We are 100% Kiwi owned. We're very proud family owned business over here, and as Angus said, we pretty much have a full breadth of coverage across all real estate markets. So we do residential, C&I, farms, horticulture, and that extends through to business sales, hotels, etc. So we kind of cover the lot. We have about 102 offices nationally and 2,000 sales and support staff around the country. And as part of that, there are also 22 franchisees that have a number of offices that they own. So each franchisee has their own AMLCO. That is the equivalent of me. I am the AML compliance officer, and we have a number of those throughout the country. So in terms of my role, I'm responsible for 4 offices or 4 reporting entities is what they're referred to in the Act. And under those 4 reporting entities, I've got about 500 staff and salespeople and about 24 offices within primarily the Auckland region. In addition to that, I also provide national support to the AMLCOs around the country. And that's also with a view to providing consistency across the group, as well as just providing them the support that they might need.
Beautiful. Okay, great context. Thanks, Donna. So with that provides a little bit of a stage for us to get started on. And we want to start by having a little look at this most recent bust as a bit of a case study. Because as we mentioned at the start, real estate was heavily involved as an asset that was taken advantage of in order to launder the proceeds of a money laundering syndicate. So for a little bit of an explanation, on the 1st of February of this year, the AFP, the Federal Police, seized a bunch of properties and assets worth a total of $150 million in Sydney and New South Wales that were believed to be purchased using the proceeds of crime. It's believed that the funds used to purchase these properties were profits from a money laundering syndicate that was based between China and Australia in this case. As a little bit of summary, it is illegal in China for someone to transfer large amounts of cash out of China into Australia. And as we know, Australia is a prime place for international investment. So it makes it quite difficult. So what this syndicate would do is obtain cash in Australia and make it available for people in China who wanted to get into the property market, but wanted to do it under an anonymous guise. And for that, they would charge a 10% fee of whatever assets they were buying, in this case, property. So quite a large amount, especially when we're looking at just this 150 million, which they could have been more. What the syndicate would do is then transfer that fee that they earned, which we might call dirty money in this case, to Australian-based companies based here that operate as shell companies. And, you know, the money would go through a bunch of different jurisdictions. So it might have started in China, and this is all alleged, of course, and gone through a number of different countries and different jurisdictions, companies, trusts, in order to get to these Australian companies. And then with that, all of these Australian companies had directors and shareholders based here in Australia. So to, I guess, the non-suspicious eye, it looked fairly safe. And with that, once the money made its way to Australia, they had to make that money look legitimate. And with that, then a lot of it was invested in residential and commercial real estate. So what some of these properties were, first of all, we had 2 luxury homes in Vaucluse and Bellevue Hill, which are quite, I guess, expensive areas of Sydney real estate, combined value being $19 million for those 2. There was a tower that was purchased in St Leonard's, which is a little bit of a business district here in Sydney, for $22 million. 5-story commercial property next to Pitt Street Mall, which is like our Burke Street, and that's $21 million. And also, quite controversially, a huge plot of land in rural Sydney near where we're building a new airport here in Sydney, which was worth $47 million. Obviously, without the addresses of all of this being public, because it's under investigation, it's a little hard to look back if, there are any red flags that a real estate agent really could have picked up. But there are a lot of common risks that come with real estate, and there's a lot of red flags that now real estate agents in other jurisdictions like New Zealand are obliged to look out for and possibly act on in ways that we'll discuss further. But with that, Donna, can you tell us a little bit about the red flags of money laundering in property? And we'll probably go through a little bit of an explanation as well of how money laundering is actually done.
Yeah, I thought that this diagram actually is a really good place to start before we launch into red flags, because it kind of gives you that 101 overview of pretty much what you've just described. I think that case study that you've provided, I actually used that for a training over here, because there were just so many things within it that are classic money laundering. So basically, there are 3 levels of money laundering that occur. It's placement, layering, and integration. And I can use the analogy of, the drug dealer that's got 100,000 under their mattress in cash, and they're trying to get that into the financial system. And that's ultimately what money lenders are trying to do, is any illicit gains that they have got, is that they're trying to get that into the financial system to try and get those funds to look legitimate. And as an example, if we use the 100,000 under the mattress, it could be something just as simple as spreading that around 11 people, getting them to deposit that money into their account, and then transferring that amount. And it always needs to be below a threshold, because then it will go under the radar of the bank. Which is why they split the amounts across a number of people. And then those people will then pass that on in the banking system, and away you go. So once that money's in the system and it's integrated within the banking industry, I call this the washing machine process, part of the process, because it kind of looks like it. And this is where, and I think the case study that Angus has mentioned is a great example, where this is where they will try to distance themselves from the illegal transaction as much as they possibly can. And they do that by, it might be generating a false invoice for work that they've never done. They might transfer money overseas to a shell company, as an example. They might loan some money to a company that they're actually associated with, etc. They often use entities such as trusts and nominee companies, etc., that help them disguise who the true beneficial owners are. Once they feel like they've given it a good wash, that's when they convert it into and integrate it into the market, and that's where real estate kicks in. So by the time the illegal gains or the dirty money has been converted into real estate, it's been given a good wash, and so there is quite a bit of a distance around what has actually occurred. So, and what will happen is that they might buy something, a property, and then they might on-sell it quickly, and then it enters back into the washing machine, and they might buy another property, or they might hold on to it for a period of time and lay low until they want to actually realise those gains. So that's effectively the way that it works in that regard. Our auditor makes reference often to Ozark, the television show, as a great training ground. So if you want to learn about money laundering, that would be a good place to start, and probably much more entertaining than me. So because real estate is a high value asset, it does mean that they have the ability to launder money very quickly and for large amounts, which is really attractive to them. And it also gives them an element of respectability. So, and where criminals look to exploit the industry vulnerabilities are our red flags. And so it's where there's those little loopholes and pockets where they can use that to their advantage to get that money laundered. So in terms of going back to your original question, what are some red flags in the industry? I think, first of all, it comes back to the absolute basics of AML, which is to know your client, KYC. Every one of our salespeople needs to know their client, and there is an expectation that they do that. And that is linked very closely with the nature and purpose of the transaction. So we need to understand, why is the client selling? Why is this transaction coming about? and link that with what you know about your client. And that's kind of the starting point in terms of assessing that risk with the client. Whenever I get an escalation, it's the first two things that I look at. And then it's about looking at if there are any red flags present. Now, there's lots of different types of red flags, but they're kind of broken down into different sections. So I'm just going to briefly cover them off today. I could go on about a couple of hours on this, so keep me in line, please, Angus, if I go over.
And also, actually, I might, just to make sure as well,
yes.
A lot of people here may have gone through processes like this before in the financial services. So if you've ever set up a bank account, if you've ever invested money, if you've ever gotten a mortgage or a loan or credit of any kind, and a lot of your, I guess, vendors and clients obviously go through that. At that point, they're doing these things. And this is stuff that now could be transferred in the future in Australia to real estate. And they're having to do in New Zealand and most other jurisdictions in the world now.
Yeah, 100%. Yeah, the banking industry over here has been captured for quite a number of years before us. So there's lots of learnings to be had from their experience as well. So, yeah, so that really what we're looking at is, first of all, is the types of entities and individuals that we're dealing with, which we've kind of covered off in that diagram that I've just shown you, that can hide who the true owner of the property is, and they don't want to be known in terms of who the money launderers are. Likewise, there can be high risk occupations or industries, these money intensive businesses, money remittance companies like you've talked about, and any new technologies. They're all sorts of high risk industries that require closer inspection. It's not to say instantaneously that they're a money launderer, but it's just that one red flag where we need to be looking at them to see if there are more issues or red flags present. I think a really good example of that would be like your classic laundromat. Everyone sort of associates laundromat with the potential of money laundering. And from what I've observed is it's still very much a risk, although it is very cliched. And, it's looking at the other factors of the transaction that really help you assess if there are other red flags present. For example, it could be that they've owned the business for 5 years, but 6 months prior to selling, they transfer the ownership to another individual or to another party, and that's the ownership structure is based in a bare trust with a nominee trustee, where there's no visibility in terms of who actually owns the property, and the person that set that up is an accountant that's got a history of unethical conduct. And it's that sort of thing where you're building a picture in terms of what those red flags are for that type of client.
Mm-hmm. Yeah.
Sorry.
No, go on.
And then it's also the purchase price can be manipulated. This is a popular one where, the property you've got a complicit vendor and purchaser, and it's about, what all they're concerned about. They don't care whether it's undersold or oversold. For them, it's about getting that money laundered and moved on to the next transaction. So as an example, an undervalued property could be where they say, look, I'll pay you $100,000 less, but I'll throw the boat in for free. That is a really big flag where they could have purchased that boat for cash, and that would be a way of integrating that as part of a transaction. Likewise, it could be that a property is overvalued, where you could have an amazing auction, and there's two parties that are absolutely battling it out, and it sells for an incredible amount 3 months after purchase, and no one can believe that it's sold for that amount. And if you've got two parties that are complicit, they don't care if they pay an extra $1 million for that property, because they've got the funds through the transaction. So it's that sort of thing, as well as the types of behaviours. Anyone that avoids to deal with you face to face, real estate in general is a face-to-face business. If you've got someone that is avoiding that contact, that is a bit of a flag. That is slightly different in the C&I space, with the commercial and industrial space, but especially in residential, it's not, you would expect to be in contact with somebody. And that sort of leads on to the types of behaviours with regards to the gatekeepers, I guess, which is what we are. We are gatekeepers, so are accountants and lawyers. We sort of all fit that same bracket, and that all money launderers generally have an accountant and a lawyer, and it's really important that if we are relying on these people, that we comfortable with what they're providing. It's also really important that from a salesperson perspective, this is where they get hooked, is that where they could establish a relationship with a legitimate client, and they do some transactions with them, they build that really good rapport with that individual, and then they want that individual wants to refer a friend to that salesperson. And that's where that element of credibility is established by that third party. And I hate to say it as well, and I know it happens, is just even when a salesperson might turn a blind eye, where they see something, it's like, oh, I don't want to know, I just want to get the transaction done. That is called willful blindness. And over here, we've got huge penalties. There are personal liability for salespeople. It's $300,000 or jail, and for the companies, it extends to about 5 million. So there are definitely consequences to not taking notice to what's happening. And just quickly, high-risk countries, if they've got countries that have got lots of corruption or lots of sanctions against them, like I know with the war in Ukraine at the moment, there's been a lot of sanctions put on individuals and entities, and it's just being aware of that and doing the appropriate checks. And likewise with activity during the transaction. Once again, the salesperson might see something that I, sitting at my desk, would not see, and it's about them observing that and reporting that when they need to. And last but not least would be the payments associated with the transaction. We all think of cash and money laundering. We actually made a policy where we don't accept cash, full stop. We did until very recently in New Zealand also have checks, personal checks and bank checks, which has recently been legislated out, but we also had a policy of not accepting them either. So it just gets rid of that risk straight away. But there are other things such as transactions that go through our trust account, something that's unusually large that you wouldn't expect, or payment from a high-risk jurisdiction. A good example would be something, for example, we've got funds, 3 lots of small payments from Mexico, which is a high-risk jurisdiction. The transaction has come about in a day for a lease of a storage facility. So if you look at that and you bundle that together, the particular transfer from Mexico is not just the red flag, but when you bundle it with the overall risk of the transaction, the red flags are definitely present. And I think that's the important thing to note, is that it's not a red flag in isolation. It's about putting everything together to create that picture and establish risk. And I would say, we aren't the police. We're literally there just to identify whether there is suspicious activity and then just get on with the business.
And that's a key misconception about a lot of this. Obviously, the risks that Donna has mentioned are things that pretty much all reporting entities now have to keep an eye on. And with that, it's not the job of a real estate agent in New Zealand, for example, to become an investigator. As in to, become the crime solver, to bring someone in handcuffs to a police station because there could be a money launderer. And with that, all reporting entities will have to monitor risks like this. And there's a couple key ways of how they can deal with that information. And I've got a couple of them on screen. But the first one, they call it SARs in New Zealand for Donna. But what banks do and other financial institutions do here when they do find something that looks a bit off, something that meets one of these red flags that we've talked about, or something that I guess for them is something that they find suspicious, is you can report a suspicious matter through an SMR or a suspicious matter report. And the good thing about these is that there's no liability that comes from it, and you aren't actually allowed to tell your client that you have submitted this. So you don't have to, say, not working with you, I'm reporting you to the government, because that's not the responsibility of reporting entities here to be the police. But it's a really easy avenue for you to report something that seems off. And a great example that we have in Australia all the time is like if you go around to a bunch of bank branches and deposit $9,900 in cash to a bunch of different branches, and you avoid looking at cameras, and you're quite quick wanting to get out of there quite quickly, it's highly possible that a bank could do a suspicious matter report on you. And that might be nothing. And it's then the job of the police to work out if that's worth investigating or not. So yeah, with that, same as well with transaction threshold reporting. So yeah, like Donna said, I mean, cash payment is rare, and a lot of real estate companies, don't want to, can't take on the risk of accepting cash because it is too risky. And in Australia and most other countries, if you ever receive cash of $10,000 or more for a transaction, then you have the obligation to report it. And again, it doesn't have to be, you don't have to really go and ask questions of why you're paying in cash, as it will, you have to, I guess, investigate it a little, but as in, you don't have to be the police and take it too far. You just have to report it, and then that can create a picture for authorities to go and chase it if it's something that links to a current investigation or can create an investigation. But the key thing here is that, yeah, there are avenues to do it, and there are red flags to observe. But with that, every reporting entity comes up with ways, and we'll go through this in a minute, of, I guess, how to actually work out what to track, what to report, how to keep track of it. And, if AML were to hit Australia in real estate, then you will have a bunch of documents and risk assessments and all this kind of stuff in place to make sure that you can make this process as easy, simple, efficient as possible so that you can get on with your business, which is buying, selling, and dealing with real estate. And so, yeah, with that, move on to the next slide, which is talking about, I guess, what we have on the table right now, and a big part of why we're having this conversation about money laundering. Because it's been talked about in the industry for quite a long time in terms of applying, I guess, yeah, the regulations that we've talked about to real estate. And it means that in future, if this law passes, all real estate agents in Australia who are involved in buying or selling real estate will need to, I guess, register with the Financial Intelligence Unit here in Australia, which is an organisation called AUSTRAC. And with that, you'll have a few different obligations of things that you need to do. And so, first of all, you have to register if you're, or if this passes, you'll have to register with AUSTRAC, yeah, if your ordinary course of business is buying and selling real estate. And at the moment, that includes stuff like freehold title, strata title, and the Attorney General of Australia is also looking into extending that to property management and leasing services. That's not confirmed at this point. And the key about all of this is that it's a proposal and it's now ready for public consultation, which we'll talk about, I guess, how you can get involved with that too. So yeah, in terms of, I guess, what the government will want you to do if you become a reporting entity is really comes down to these 5 main points. So first of all, customer due diligence. Donna mentioned it as know your customer, which is what you hear it more as here. But customer due diligence is that practice of making sure that you understand who your customer is. So that's not only talking about looking out for the red flags that we talked about here, but also obtaining identity documents, for example. So if you are selling the property for someone who's an individual owner of a property, then making sure that you can confirm who they are and have evidence of that. And same if you are working with someone who is, I guess, selling a property through a company or through a trust, whether that's domestic or whether that's international, working out who is really behind that transaction and finding what we call the beneficial owners. So the people who are truly benefiting from that transaction. So real estate agents will have that obligation to identify that through a bunch of means, and it's something that that Bayleys do through First AML, for example. And with that, you also may have the obligation to do ongoing customer due diligence. So through, I guess, doing CDD, as we call it, you create this profile of your customer to work out not only who they are, but why are they wanting to sell the property? For what purpose are they selling this property? And also kind of understanding their normal behaviors. And there are examples in real estate where you might have someone who is a recurring customer, whether it's, like for our audience here, if you work with certain property developers, that's a common example we see. then that might be a recurring customer where you're kind of helping to sell properties. And in that case, there's an obligation to do ongoing customer due diligence, so that if you see a transaction occurring that doesn't fit that profile that you're used to for that customer, whether their behavior changes quite a lot or something about the way, who the beneficial owners are changes, then that can become a red flag in itself. So with that, there's a bit of reporting as well. So if you notice something that is suspicious and is one of those red flags, you'll be obligated to submit a suspicious matter reporting report, which is done online. It's a template on the AUSTRAC website and all that kind of stuff, or whether it is threshold reporting. Also, if you ever receive funds from, cross-border transactions, as well as there'll be an annual compliance report to do, which in Australia is kind of interesting. It's like a little qualitative report thing, like, did you get any high risk people this year? How have you kind of determined risk? But yeah, there's lots of information online and lots of companies that can help out with that. Number 4 is an AML program, and every reporting entity in pretty much every country is obliged to create a unique AML CTF program that fits their business, because not only do different customers of ours, different clients of ours have risks associated with them, but so do our own businesses. So every single real estate company has a unique level of risk depending on how big you are, what kind of clients you work with, what region you are in, and all that kind of stuff, the kind of property that you sell. And because of that, we can't really have a one-size-fits-all approach to risk, where everyone can be looking for the same red flags, and everyone can be treating customers the same. And therefore, under the legislation, we take what's called a risk-based approach, which we love to talk about, in terms of doing all of the things involved with AML, but also dependent on your business and your unique risks. And so with that, when AML comes around, everyone will be required to have a unique AML program that kind of documents the unique risk to your businesses and what actions you will take, like the CDD, the OCDD reporting, in order to, reflect that. As well as record keeping. So you collect a lot of documents during AML, whether it's people's IDs, whether it's documents about their company, their trust, whether it is, actually keeping the information about creating that profile that we talked about before. And you'll have the obligation to, keep that for a number of years. It's usually 7 in Australia, but something like that. So, keeping it securely on a good online database or something like that, then that'll be a requirement too. So that's, the main picture of what this proposal outlines, and it's in line with what, real estate is doing in other countries as well. So what we like to say, there's 5 countries left that don't do this at the moment for real estate. The US is one, Haiti and Madagascar are one, and Australia is another. So we're lagging a little bit behind, but at the moment, that's why this is all out for consultation. And the key with that is that you'll be able to get involved. But in terms of, informing where this all came from, it was all based off experience from around the world. And we know that the government's been talking to, countries around the world and industries around the world and working out what worked there, what didn't work there, and how they actually ended up implementing all this stuff. So time to switch to Donna. From your experience, Donna, obviously real estate was captured and required to do AML from 2019. And that's when the legislation came into effect. So how did that go for you? And what did you learn about implementing such big changes in terms of how you do business?
Oh yeah, absolutely. It was huge for us. We've been captured since the 1st of January 2019. So we're coming up to that 5-year mark. And just to give you a bit of context, we were part of phase 2, not dissimilar to Tranche 2, where we were also captured with lawyers and accountants at the time. And just to give you a bit of context, we are required to complete customer due diligence on, or know your client, on our client. And that could be either our vendor, if we're selling something, or a purchaser, if we are operating on a buyer's agency, or if it is a lease, a commercial lease, then the landlord or the outgoing tenant could be our client. Interestingly, property management's not captured over here. So I'm interested to hear that it's been considered in Australia. So we don't worry about property management at all. It's primarily that sales and leasing space where our business is focused. Probably the biggest thing for us was around the timing of the customer due diligence in terms of when we need to do it. We are required at the moment to complete customer due diligence or know your client before an agency agreement is signed. So that effectively means that we can't do any business until the AML process is complete. And that's been a huge disruptor for us in terms of we had to change pretty much how we do things over here, because AML is not just a simple matter most of the time of just getting someone's ID and that's it. We've turned out to be a country that loves trusts over here. I'm not sure what Australia's like, and it's taken time to get the AML done, and so it could take a few days, it can take longer depending on how cooperative the client is and what documentation is available. So it's really impacted on the way that we do business. It's slowed us down, and I will actually particularly raise the leasing side, because when the legislation was allegedly put in place, the timing was the same for leases and sales, and we quickly learnt within the first month that it just wasn't practical. And the way that it works over here with leasing is it's high volume of transactions, and it's very common for a landlord will give general agencies to like 5 or 6 different agencies with the view that hopefully one of them will find them a tenant. And it was just, and because of the low conversion rate, because they share the love across the whole industry, we're paying quite significantly for due diligence that never actually resulted in a transaction. And it also made it extremely difficult, because the vendor was being asked 6 times, or the landlord, sorry, was being asked 6 times to complete the same due diligence from all 6 agencies that needed to do that prior to listing the lease. So that was a real disruptor for us. And it took, interestingly enough, it took 2.5 years before we could get updated regulations to make that work for us. So we had 2.5 years of pain around something that just was not practical. So what I would say to you is that when you are talking to your regulators, make sure that you are looking at that timing and that you get it right across all business sectors. I think as well, when you're implementing an AML regime, CFT regime, there's a real balance and a real challenge in terms of balancing your compliance obligations and your commercial reality, I guess, in terms of, you're in business to sell property, and there are times where AML can prevent you from doing that as quickly as what you would like. So I think what's important to remember is that it is a risk-based legislation, and there are lots of shades of grey in that legislation, and for us that took a little bit of time to get our heads around. It is very much getting to know the legislation in terms of what is doable. I will say that the different clients have different levels of risk. So a client that is maybe purchased their family home 40 years ago and set up a trust at that time, and that's now selling because they want to go to a retirement home, that's a very different risk profile to a client that might own a $50 million property over here, selling it quickly, and it's an overseas trust with trustees based in the Cayman Islands, for example. 2 really different risk profiles, and as such, you can adapt your approach around that. What I would say is that for us, it's definitely created a whole new industry over here. There's consultants, there's auditors, there's staff. Like, I didn't exist 5 years ago, and there's also been huge development in technology in that time. When we first started, there was virtually nothing, and I think that that's a huge advantage that you guys have got, in that learn from our pain. And learn, hopefully you'll get some information from me today, but it is costly. It costs our industry tens of millions of dollars a year to comply. So it's very expensive, it's time consuming, and it slows us down. So please, I guess, use the lessons that we've learned to hopefully make that easier for you. I will say, I actually asked Angus to include this graph because I think it's a really great illustration of the journey you're about to commence on. I think there's lots of lessons that you can learn to make the journey for you much easier. But I think regardless, it is initially going to be quite a shock to the system, and it is very what I think for us, we've hovered in that shock, denial, anger, blame section for quite some time, and that's as an industry, not just a company. Like, it's been an absolute disruptor for us, and I think we've had a few remissions along the way and gone back down there, but I think we're definitely now in that acceptance and problem solving stage. And I do think that the closer that you get, quicker that you get to that, the easier it will be for everyone.
There we go, I'm back. No, absolutely. And so, I mean, even that, actually kind of running low on time. So I might skip ahead to a little bit about, I guess, what happens next. So with that, we're in a consultation phase right now. And at this phase in, I guess, the legislative cycle, this means that the public now has the opportunity to talk about all of this. So this is a huge disruptor. We can't ignore that. And it's going to change the way that all real estate agents do business. And at this point in time, there is a consultation open till the 16th of June from the Attorney General of Australia, where anyone, whether you're watching this as a real estate leader, someone at REIV, or even, a sole operator having with your own real estate branch or real estate company, you can submit your opinion on all of this, whether, I guess, what you're worried about in terms of whether, what you like, what you don't like about all of this, and it can be used directly to affect how it's going to affect your industry. So we could not, I guess, ask enough of you to have a think about this and submit something to the government so that your voice is heard, and that this legislation that's going to have a big effect of you can be as balanced and informed by industry experience and knowledge as possible. With that, we can expect to see a bill on this enter Parliament after some consultation in probably early 2024, which means that obviously there's no fixed timelines in place, but you could start to need to do AML by the end of 2024, maybe 2025, certainly not this year. So it's not quick, and it's going to take some time, and there'll be a big adjustment period too, where people will be able to, I guess, get used to these laws. There won't be any big punishments for a few months, maybe even a year, until everyone's used to doing this and to implementing AML. And so there's a lot of things you can do. I have only seconds left, but talk to REIV and industry bodies about this, everyone watching, and make sure to talk to as many people as possible who've gone through this experience before. And you've heard some stuff from us here today, but the conversation will keep going. And I guess as well here at First AML, we're ready to help out, and you can always reach out to consultants, companies who've gone through this before, to ask about how AML works and how you can be ready for changes if they do occur in the future. And with that, I think we'll leave it at that. So from here, there is the Q&A section. So I think we will be right back in terms of handling that Q&A.
But yeah, thank you. It was very, very interesting. As I was saying, fascinating that we're one of the only 5 countries that doesn't have this compliance, seeing as we're so compliant about everything else. We do have a couple of questions that have come through. Andrea's asked what software and what costs are involved and what program would be suitable to do the compliance.
Look, I'll answer that. I think that AML absolutely is a technology game. It's one of the things that we've learned the most is that it's about making things efficient, and we tried to do some in-house developments, and we just decided that it was better to focus on someone that specialises on that. The costs are based on the customer due diligence that's completed. So it's based on the cases that we do. Angus might want to add to this. And it's definitely, we found that we did a cost analysis in our business versus doing it in-house or outsourcing, and we just found it much more effective and cost-effective, and also efficient in terms of protecting client information.
Yeah, 100%. And I think there are a lot of options on the market at the moment, and competition is a good thing in this space. And there's different, I guess, softwares and technology that can use that may suit different levels of businesses different. So, the larger your business, the more, I guess you can probably invest in this kind of stuff as well. And if you're a sole operator that, you know, is only really working with individuals, then, you know, you'll want to look at the kind of solutions available. But I mean, for example, you'll want to look at, I guess, having software that can, I guess, gather ID details and run them against the right databases. In Australia, we have a thing called the DVS, the Document Verification Service, where you can run stuff like driver's licenses, passport, birth certificates, Centrelink cards, all that kind of stuff. So that is available, but then also you need to screen people as well. And what that means is to see if, you know, the people that you're working with, the beneficial owners, may have sanctions against them, because sanctions lists are very long, and there are software solutions that can do that. There may be, I guess, solutions where you want to get business information from. And so if you're, especially on the CNI side, the commercial side, where you want to get information about companies or be able to analyze trust deeds. And so I guess that question, without endorsing anything in particular, definitely look for solutions that can, I guess, handle as much of that as possible. And, you know, AML, of course, Donna mentioned it, it does cost, and compliance costs, but obviously fines and not, I guess, complying can cost a lot more. So just looking at what suits your business is really important, and finding a solution that does as much of it as possible, because having a lot of individual tools can lead to a lot of headaches. That's definitely something we've learned at First AML.
Yeah, thank you. And the other one, which I think we missed before when we went off air, we had someone ask the timing. Like, Donna, you were saying that before you can sign an agency agreement, the identity check needs to be done. Like, what sort of timing does that take?
Look, the opportunity is that if there is something happening and it's happening quickly, then there's a very good incentive or motivation for that vendor to get the know your client completed. What I would say though, for the Australian market, is you've got the opportunity to have those discussions, you know, learn from, you know, that's our timing. We're actually in the process of doing some regulatory reviews at the moment, and I think that's going to change. And I think that what's important is that as an industry, you need to be getting together with your regulator and working out what is the best timing for your organisation or for your industry. You know, and it also comes to, can I just mention as well, in terms of that when you do go live, is about having education within that the general public are educated that you need to do it, because we've encountered a lot of resistance from clients, and a lot of it's because they just had no idea that they had to do it. So I think that education is key in terms of getting that AML completed quickly.
And this is a great thing as well to add to. Oh, Christine? No,
I was just going to say, do you think it's like the job of the agent then, or the conveyancer that's doing the sales documents? Like, who's like, yeah, that's, I think, a big one as well.
Yeah, it's the regulator's view that it's both of us. We are all captured, so it's not something that we cannot do, but it's more on the, I think it's very important that clients are absolutely at a loss as to why the real estate agent is asking them this information. And I think in hindsight, our REIV, our Real Estate Institute over here, I think what would have been great is to have work with our regulator to actually do much more intensive public education. And I think that in itself would have made quite a big difference for us over here.
Yeah.
And that's the big thing in terms of this consultation as well, is in terms of what Australia has right now. For example, a bank here or financial institution has to report and I guess do all KYC stuff within a few days of starting a business relationship. And this is all stuff that's going to have to be defined by the law. And like Donna said, we're in this stage now where, I mean, this is something that anyone watching today in the REIV and any other bodies can submit their feedback on to this consultation and you know, want to clarify this, because it will come up. And, you know, so there's a little bit of leeway, but the key is that you shouldn't be providing services to someone until AML is complete. And, you know, things may get in the way and there are emergency circumstances, but, you know, the government is likely to look at countries like New Zealand and overseas and say, okay, well, if they're doing it before an agency agreement has been signed, then maybe we'll do the same thing. So this is the opportunity to really get involved in comments on that.
Yeah, no, it's good. Lovely. All we have time for today. So I'd like to thank our speakers, Donna McMillan and Angus Hook. It's been a very interesting session. We'd also like to thank AML for their ongoing support. And that concludes this afternoon's webinar. I hope you found it informative. You'll see on your screens details of upcoming REIV Buyers Agents Breakfast, which is happening in June. And we hope to see you there, which will be good fun. And finally, shortly, you'll be emailed an evaluation form. It'd be great if you could complete this as we value your feedback and refer to it for the planning of future REIV events. Thank you for joining us today.